Hey everyone, UiPath reported quarterly financial results that sent the stock price down more than 30% following the release. So I wanted to dig deeper and provide more context behind why the stock price is falling and give a little more insight as to the leadership change at the top and the cause for the downgraded guidance from management about their revenue and profitability for 2024. So let's take a look at the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the new CEO, which was the previous CEO, making some comments about the leadership change at the top, saying that, as you may have seen in our press release this afternoon, Rob Enslin is leaving the company and has also resigned as a member of the board. The CEO saying that we're grateful for his contributions to UiPath. And then saying that I am excited to step back into the CEO role. So the current CEO, Daniel Dines, was the previous CEO and also the founder of UiPath. So it looks like the person they hired, the CEO Rob Enslin, to come in just a few short months ago, came in, made some changes, made some moves that seems to have been at odds with the founder, and that led to the sudden departure of Rob Enslin. Now, this is never good news, and you can understand the reaction from the stock market, investors selling UiPath stock, because these types of sudden changes are not good for the company. They're not good for the prospects. They're not good for the relationships between the company and its employees, and they're not good for the relationships between the company and its customers. If you're making sudden and abrupt changes like this, customers don't like to see this type of volatility in leadership. They want to deal with sustainability. They want to deal with consistency, continuity. They don't like to see these types of rapid changes. So let's try to understand what was going on here. So the new CEO saying that during the past year, I had the privilege of immersing myself in our product and engineering efforts, and this gave me clarity on how to move forward. So during this time where the founder hired a CEO to take over the CEO role, the founder was still highly involved with the company. The founder didn't take a hands-off approach and say, all right, this is your company now, you take over. The founder was still involved. The founder still had input. And it seems like that input was at odds with what the new CEO was trying to accomplish. It seems like there was disagreement. They were butting heads here. And that's what caused the sudden departure, this disagreement between the founder and the CEO. So the CEO saying that the combination of generative AI and automation provides customers is significant and it's expanding. So in the latest quarter, revenue grew by $335 million, which was an increase of 16% year over year. Now that was in line with what management had told investors to expect. But UiPath, since they primarily generate their revenue on a recurring basis, these are contracts they signed probably a while ago, and they're just fulfilling those contracts. So there wasn't disruption to the company's current revenue, the current quarter. Most of the disruption came in future periods or second and third quarter, and we're going to learn more about that here. So the CEO saying that our top line results were generally in line with our guidance, but we're not satisfied with the performance. They had a healthy start to the quarter, but they saw the pace slow as they progressed through the second half of March and into April. So challenging macroeconomic environment is persisting with mid-market customers, as well as a change in customer behavior, particularly with large multi-year deals. Expansion opportunities closed with a reduced size or pushed out of the quarter. We saw inconsistent execution, which included contract execution challenges on large deals and certain sales compensation changes which we are working to rectify. So these are a couple of things that did not go well in the quarter, and it looks like the founder was not happy with how things progressed in the quarter. There were maybe some large contract opportunities that did not work out the way the founder was expecting. And since these are very large contracts, millions and perhaps tens of millions of dollars, or maybe even more than that, the founder was disappointed, and it seems like that's what led to the previous CEO it seems like, yes, the previous CEO resigned, but the more I'm reading into this, the more it seems like the previous CEO was sort of pushed out. And the sudden change, and also usually when there is a simultaneous resignation, both in terms of the leadership role, CEO, and the board of directors role, that really signals that the previous CEO wants nothing to do with the company anymore, resigning both as CEO and as part of the board of directors, and doing so abruptly after a few short months of joining. This doesn't feel like it was planned. It feels like it was forced, and it's likely that the previous CEO was pushed out because of these execution challenges, because the failure to execute on some of these big deals. Further, there were some investments made to reaccelerate growth that have fallen short of expectations, and that also made the company less agile in responding to customer needs and created short-term pressure on operating margins, all of which we are committed to rectifying. Wow. So a lot of blame being placed here. And it seems like the founder, which is now talking to us investors, telling us that, look, they're the previous CEO, while not actually saying that this was the previous CEO's decision, it kind of says it without actually saying it. Like, look, we were inconsistent executing on certain deals. Additionally, we made investments for growth that didn't work out the way we thought. But who was at the helm a couple of months ago making these decisions? It was the previous CEO. So the founder now saying, those were the previous CEO's problems. Now I'm here and I'm going to rectify the situation. I'm going to fix it. I'm going to take over. I know what went wrong, and I'm going to step in and I'm going to fix it. So interesting developments here from UiPath. If I was a shareholder, I would not be happy with these developments. I had recommended UiPath stock as a buy. I had recently upgraded UiPath stock to my list of top stocks to buy. And so I wasn't happy with these developments. The stock price fell over 30% following these developments. So the decrease in the stock price offset my lack of excitement about these changes. If the company announced these changes and the stock price didn't change, I would have likely downgraded UiPath stock, because I wouldn't have wanted to pay the same price as the stock was trading at before the news came out. But since the news kind of caused the stock price to adjust itself lower, I reiterated my recommendation. I kept UiPath stock on my list of top stocks to buy, but it's on a much shorter leash now. It's on a much shorter leash now because of this abrupt change, and I'm concerned that the transition will not be smooth. So I'm keeping a close eye on UiPath. I have a short leash on this one, and I'm going to do further research and share with you all of the latest developments with UiPath. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.